From a market standpoint, do you think the sell-off in Adani group of stocks is something which is well digested?
So I would not like to comment on that. But see, I think at Abakkus we have always followed the discipline of valuation. And it's not only this group, but a lot of other stocks which have great quality, but priced beyond perfection, which is what makes us a little bit of having a value conscious approach. And I think that is what we have continued to follow.
My question was that from a market standpoint, do you think the selling in Adani group of stocks and the domino effect, let's say, created on lenders and other banks, do you think that's behind us?
So, time heals and time makes us forget a lot of things. We are already, I think, 1 month into the process or the news flow. I think a lot of water has flowed below the bridge. I don't know whether this is the end of the news flow, but I would say that markets over a period of time, as has been the history and I would say experience earlier, tends to sort of make it less and less relevant as we move forward. So maybe it was very relevant towards the end of January. It is relevant maybe today, but not to the same extent it was January. But I think with time, markets will forget and move on.
When we spoke a couple of months ago, you did call out that private banks and small mid-tier banks were looking cheap, attractive, and they were growing and their balance sheets were in a fine fettle. Some of these banks have rallied even after the recent underperformance on an average 30 to 40% in last 1 year. Do you think that now small and mid-tier banks are no longer cheap?
Nikunj, we, I think, make the mistake of just looking at very near-term performances, both on the upside and downside. So smaller banks have done well last 1 year, but for the previous 5 years, they've done nothing. And I would say that some of these banks have transformed themselves, in terms of adoption of technology, in terms of moving to better practices, in terms of lending as well as attracting customers. And some of them still look pretty reasonable given their faster growth trajectory. At the same time, I think in banks, one has to be now a little bit more choosy in terms of bank to bank. You can't classify the larger banks in one basket, the smaller banks in another basket. I think you'll have to pick and choose because the trajectory of asset quality and growth can be very different for different banks. And here I would say that banks who are a little bit forward-looking are the ones which should be preferred over banks which have been a little bit late in terms of technology adoption.
Sunil, a year ago, consumer tech and fintech stocks were trading in bubble zone. A month ago, they had come down to levels what could be called as a fear zone. How are things looking for the entire consumer tech and fintech? Because most of the promoters I have met and we've interacted with are of the view that the path to profitability cannot be compromised now.
So, I think first on the technology front, great entrepreneurs, great companies, hats off to them. They have created segments which did not exist, businesses which did not exist, given employment to so many people, make our life so easy, in terms of whatever we do on a day-to-day basis. Having said that, I think these investments are for investors who understand these businesses and are willing to take a 10, 20-year call in terms of growing the business and profitability. As I said, we are value-conscious investors and we don't invest in companies which don't have profits or don't have visible profits. And I think most of them still don't have visible profits. Obviously, there are a couple who are on the fringe of seeing profits. And I would say that as the markets get more and more comfortable on their road to profitability and self-sustenance, then more and more investors will look at it. Nikunj, what happens is a lot of these companies depend on regular capital infusion to just sustain. I think those companies are definitely at risk because if capital dries up, then their existence itself will be at risk. But companies which can sustain through at least internally generating what they need to grow, I think those companies have a better chance of surviving and maybe even thriving. As far as consumption companies are concerned, the whole concept of growth, growth means that you have to grow at a faster pace than the nominal GDP growth of the country. A lot of these consumption companies trading at 70, 80p were growing in line with the nominal GDP or even less. And I think the markets have lost patience because of the last 2, 3, 4 years of them constantly, disappointing on growth. And to that extent, there has been some price correction and some time correction. I think going forward, there is a little bit of room, more left, maybe both time as well as price correction. And then, a lot of them have great franchises, great brands, and they will become really attractive.